All right, good evening, everyone. How are you guys doing this evening? This evening, we're going to be doing trend lines plus time. Which one of you guys were here for the last class we did on trend lines plus time? If you were here, just give me a yes in the chat box. And also, just let me know which pair you'd like us to take a look at. I like looking at pairs from the European and US session. So you can send me any pair with the European and US session. Okay, any pairs that are within the European and US session. We can look at that. We don't have to look at the pair that I have on my chart. So let me know, guys. Let me know what pair you'd like to take a look at. And also let me know if you were here in our last class. Okay, gold and GJ, they're not necessarily Euro and US. I'd like both sides of the pair to be within US and Euro. Okay. Gold is not really a Euro or US pair. It moves in the US market sometimes, but it's more Asian. Okay. All right. Euro USD, gold, pound USD. Okay. All right. So EuroCAD. Okay, I'll take the most unlikely one, which was EuroCAD. Okay, so let's go with EuroCAD. Let's see, EuroCAD. There we go. Good, so we're on the EuroCAD chart. And you guys know that I like looking at my chart from the 1 hour time frame. Okay, so I'm on the 1 hour time frame. I see some more of you are coming in. This evening, what we're doing is trend lines plus time. I'm showing you guys how trend lines and time come together. Okay, so let me just compress my chart a little bit. Okay, so you can see my chart here is compressed, right? Okay, so let me just go back a little bit. All right, so this is the highest point that price came to. Okay, highest point that price came to up here. I'm just going to draw a trend line. Okay, so drop the trend line on the high. I'm going to extend it. I'm going to change the color. I know some of you may like pink. I'm going to use blue. Okay. Then, oops. Looks good. I'm going to draw another copy of this trend line to create my channel. Okay, I think I got it. And I'm going to bring it down to the low. Okay, so how many of you guys know how to draw a trend line? I'm going to also create another copy of this trend line. And I'm going to connect it on the next. Oops. It's a little bit difficult copying trend lines in MT4. Gotta draw them every time. All right, good. So far, we kind of have what the market is looking like as it relates to trends. I can still see that we're missing something in here. I can actually draw other trends inside of this big channel to the downside. But the main thing is that we want to be able to detect the trend as early as possible. And usually what we use to detect the trend is two swings, okay? We have a move down, we have a move up, and when we get the next move down, breaking the low, we know, okay, this is a potential trend, okay? Connecting these two swings together, we have a potential trend, all right? Now, inside of a major trend, we have minor trends, okay? So what we're gonna do is, I'm gonna make this big. And I'm gonna go inside of the major trend, okay? So we got swing down, swing up, swing down. When this low is broken, we have what we might wanna call a confirmed trend to the downside, okay? We clone this upper trend line, we bring it down to the low, and that will give us the bottom border of this channel to the downside, okay, which we look at as a trend. All right. Now, what I want to do after I get my trend confirmation over here, I want to now start looking for reasons to go long or reasons to go short. Okay. Now, what I'm looking for is a touch of the trend line. Whenever price comes and touches the trend line, I'm looking for a reason to buy or a reason to sell. Since this is a downtrend, the sell side is the most effective side, okay? We wanna sell because every time price makes a move to the downside, we're looking at more of an impulsive move to the downside. We could have some impulses to the upside, but they're not necessarily always gonna be strong, okay? Since it's a downtrend, the stronger move will be coming to the downside. All right, so we've established our trend. And what I'm looking for is, I'm looking for price to come hit that upper trend line. I can look for price to come hit that upper trend line, or I can also create other minor trends inside of this major trend to the downside. So these corrections that we're finding, like this, these corrections, let me just chart them out. Let's create our channel. All right, so these corrections that we're finding, we can actually use them to give us an idea of how the price is going to behave. So for example, we have price moving up, down, up. Once it comes within this time slot, this time slot here is between 2 a.m. to 8 a.m., right? I'm looking at between 2 and 9 actually. So the close of the 8 a.m. candle will be 9 o'clock, right? So the open of the 9 o'clock candle, I'm looking at if that one hit the trend line and close. I'm also going to look to, try to find an entry. If it hit the trend line, closed below the trend line, I'm looking to go short, okay? So this is a bearish formation, as you guys know this as a flag. So once the price comes and hits the upper trend line, that's where we're looking for a reason to go short. Once it hits the upper trend line within this time slot between 2 a.m. and 9 a.m., well, the close of the 9 a.m. candle will be 10 a.m. So between 2 a.m. and 10 a.m., if we get price hitting that upper trend line and closing, we want to make sure that we look to go short once it closes inside of this trend line. Because once it hits the trend line, closes inside the trend line, it's basically giving us a hint that price is not looking to go to the upside. It's rejected off the top border of the trend line, and it's looking for the next move down. Okay, so as you can see here, we have the 2 a.m. candle closing at 3. We have the 3 to 4 a.m. candle hitting the upper border of the trend line, and you can see price go down. Okay, so price goes down, it pulls back into correction, and then it pushes down again. Okay, so this would have been first impulse, correction, next impulse to the downside. Okay, this one kind of looks like it came either pretty much back to the top or almost identical to the top. Let me see here. It looks like it probably broke the top. Okay, so it broke the top in this case here, where it came making more of a double top type scenario, and then it went down. Okay, but overall, that's the type of setup that we're looking for. We're looking for the price to come hit the upper trend line and move to the downside. Okay, because as you can see, this is a flag pattern formation. It would have been an even stronger setup if price had hit this upper trend line over here. Okay, and the ideal setups are when price hits this upper trend line. Okay, these are the ones that you really want to take because these are the ones that come with high volume, high volatility. Okay, as you can see, this one, it is moving down, but it's not moving down very aggressive. It's not moving down very strong. Okay, but once they come off the top of the trend, they are going to be moving down very aggressively. Okay, let's see if we find one where it moves off the top of the trend. But here we have some bouncing off the bottom trend line. And you can see we're getting a move back to the upside. It's not very strong, but we're getting a move back to the upside over here as well, getting a move back to the upside. But these are not the ideal type of situations that we'll be looking for. We're looking for the ones where if we're looking at the downtrend, we're looking at price bouncing off the upper trend line to the downside. That is the stronger side of the market. Okay, let's see here. We didn't really find any of the setups where it's bouncing off the top of the trend line. Over here, it broke. Right, so over here, it broke the trend line. Let's try to make this a little bit smaller. Okay, so over here, it broke the trend line, which means that it looks like we're in some sort of consolidation over here. So if we had set up, let's see how this would have played out. And we have many approaches when it comes to drawing trend lines. In some cases, if you're not able to draw your trend line from the bottom because the bottom is not clear when it's an uptrend, you can actually try to draw your trend line from the top if the trend is already extended. Let us see if this top is giving us a nice clear area. No, the top's not giving us a nice clear area. So we're just going to use the bottom. So connect the lowest swing to the next swing. And we have our nice trend line over here. I'm going to now try to clone this trend line to create my channel. And there we go. So if I draw my trend line at the bottom, when I try to put my trend line at the top, I don't necessarily try to catch the highs. I try to catch from body to body. Okay, I try to put it inside of the wick so that it rests on the body. So it gives me more of an accurate idea of what my trend line is actually supposed to look like, right? So here you can see we have our trend line here. And if we were able to draw this trend line after these two swings, this swing low and this higher low over here, then we would have been able to project most of this trend to the upside. And we would have been able to take advantage of the trade opportunities that presented itself after this point. Okay, so you can see here that we have price coming to this area. When price came to this area, it hit the upper trend line. This would have been a nice area for us to look to go short. Okay, so as you can see, we got a nice short setup over here because price hit the upper trend line. Price came down, hit the lower trend line. We would not necessarily be too excited to get involved in the trade at this point because it's a bit late in the day. But as you can see, if you did get involved, you can see you got a nice aggressive bounce back to the upside. Okay, but after 12 p.m., Between 12 and 4 p.m., you're not excited to get involved. As you can see here, this is the candle that closed at 1 p.m. So this is 12 to 1. So by the time that candle closed, the 12 o'clock candle closed, everything just slowed down. Okay, so you're not excited to get involved in a trade after 12 to 1, sorry, 12 to 4 p.m. Okay, after that, you're basically most times going to find chop in the market. Okay, so I try to focus my entries between 2 a.m. Eastern Standard and the close of the 9 a.m. Eastern Standard candle. Okay, so that's between 2 and 10 basically. All right, so as you can see, this is going to be the close of the 9 o'clock candle, which is 10 o'clock. So I'm done. By this time, I'm done. So the next day came around. As you can see here, we're getting price hitting the lower trend line. When price hits the lower trend line, that's going to give us a buy signal once this candle closes. So the candle came down, hit the lower trend line, closed bullish. We're looking to enter this trade going long. Okay, so if we enter this trade going long, as you can see, price went up, it hit the upper trend line, you're out of the trade. Okay, if you're looking to go long on this one, the ideal direction to go is down, because this is a channel to the upside where it's actually a corrective formation. This one did become extended. It did break out of the channel. And not every time we see price break out of a channel, it means that the price is going to be going completely bullish. Okay, so we got to be careful with that one. We need to look at it within the channel. If it breaks out, closes above the channel, continues moving. Better yet, if it corrects above the channel and breaks that high of the correction, then we can be expecting that price is going to be continuing to the upside. But none of that happened in this scenario. In this scenario, you can see that every time the price came to the upper trend line, it's bouncing off it back to the downside. Okay. So here you can see that price is continuing to move down. And as price is continuing to move down, what we can do in a situation like this is look to create another trend. All right, so price is coming down. We have these two highs over here. We have this one being higher than the next one. So let's see here. If we use these two highs to create a trend, all right, so our trend line will look something like, okay, so far it looks something like this. Trying to draw this as accurate as possible. All right, and we take this, the copy of this upper trend line, we bring it to the bottom. And as you can see, the price is being rejected exactly at these areas right here. Every time it comes and hits this lower trend line, it's bouncing off it. Okay, so it's showing you that price is finding support at these levels. All right, so this is how important trend lines are. When you're trading, using trend lines is going to be very, very valuable to your technique, whatever technique you're using, because it's going to help you to find an area of support or an area of resistance. And especially if you incorporate time into it, you will find that if you enter at the right times, you will be able to catch a very nice volatile move, which is generally an impulse. Okay, the market generally creates impulses between 2 and 9 a.m. Okay, so that's generally when you're going to get a very strong move in the market, especially when you're looking to trade the European session and US session. Okay, I'm looking at my chat box. Let me see if I think I have some comments here. Joe says I'm trend line crazy. Joe says looks like middle line to right. why you're using MT4 for time also. What do you mean by why am I using MT4 for the time? What do you mean? Mm. Okay, you guys use TradingView. Well, in TradingView, you can always adjust the time zone. In MT4, you can't really adjust, well, you can't adjust the time zone. But if you understand the server time that MT4 is using, then you would be able to, do your conversion and know what time matches the MT4 time. Okay, so in this case here, I think this is GMT3. So in GMT3, we're looking at, this is basically 9 a.m., but this is actually going to be 2 a.m. Eastern Standard. Okay, so 9 a.m. GMT3 is going to be 2 a.m. Eastern Standard. Okay, GMT plus 3. It's going to be 2 a.m. Eastern Standard. So I did my time conversion, so I was able to put on this indicator to show me where these time slots are. And I'm only looking to be interested in taking trades inside of these time slots. Okay, the only time that I'm taking outside of this time slot that I created is the 9 to 10 a.m. candle. Okay, so for me, this is the most important part of the market as it relates to time. Okay. All right, Joe says, okay, I got you. I'm liking it. Wonderful, wonderful. All right. Okay, so if you guys look at this carefully, you can see that whenever price comes and hits a trend line, we will get some sort of move. Now, with me, as I've told you guys before, I've developed specific software that would, allow me to take my entries. Once I see price come, hit a trend line and close, I would turn on my software. It will look for my entry. If it's going to go long, it's going to take the long. If it's going to, for example, let's say in this case here, this is my trend to the upside, okay? And I had a situation over here where this candle came, hit the trend line, closed bullish, right? So when I see this hit the trend line, closes bullish, if I turned on my software and the price did not go long, it turned and came down, it would have been able to catch the sell trade to the downside. Okay, so I still would have been able to catch the volatility. It doesn't really matter what direction the volatility chooses to go in. And if you look carefully over here, you will see that there is another pattern inside here. And that pattern looks more like this, right? That pattern looks more like this. And these are squeeze patterns, okay? So since these are squeeze patterns, whenever I find squeeze patterns, most of you guys may look at it and say it's a triangle, it's a pennant, it's a wedge. We have many names that we give them, okay? So I just look at them as squeeze patterns and expanding patterns. So for squeeze patterns, I will trade all of my squeeze patterns at 2 a.m. Eastern Standard. It doesn't matter what direction the price wants to go. As I said, I use software for getting involved in these entries. So I would simply just turn on my software at 2 a.m. right? And it's going to basically take this trade for me, okay? Whether it goes up or whether it goes down, it doesn't matter, okay? It's going to be able to catch that trade, okay? So squeeze patterns, lovely patterns. They tend to give you a very big burst of volatility, a very big burst of momentum. So you're able to catch some lovely pips when you trade squeeze patterns, okay? As you guys know, squeeze patterns, mainly referred to as triangles, they happen in a B wave if you're looking at an ABC pattern, right? If you're looking at AB equals CD, it's gonna be the BC leg, okay? So this is gonna be A, this is B, this is C, this is D, okay? So this is the BC, okay? Creating this triangle. You guys clear on that? I see Joe says they seem to break out downward a lot. Joe is saying that the squeeze patterns tend to break out a lot to the downside. It all depends. It all depends. This one has an impulse to the downside coming before it. So you can see we have impulse, then we have this triangle looking correction, then we have another impulse to the downside because it's impulse, correction, impulse. That's generally how the market works. Okay. In some cases, we could see it do impulse, correction, and instead of this pattern here moving to the downside, you can see this one come and shoot to the upside. And that's only because it's going to make this leg repeating here. Okay, making 1, 2, 3, and then you get down. Okay, that's generally how it works. All right, so it could be complex, and that is one of the reasons why I like creating software for my entries, because in some cases we get what we call a fake out. That's where the price is supposed to be going one way based on your analysis, and it goes in the opposite direction after just pushing in your direction, then dropping in the opposite direction. So I created a software that would help manage my entries. So in the event that the momentum shifts in the opposite direction, I'm able to shift with it. Okay. It helps me to avoid getting caught up into traps, in trap patterns. All right, let's see. So we would have taken this one to the downside. This one is still showing us it's bouncing back off the trend line back to the upside. So this is this could have been a nice one as well. However, in a case like this, it would be good to favor the trades to the downside. Every time you get a nice bounce within the time slot, you can take it. You just need to understand if it's bouncing against the trend, there's a great possibility the move is going to be a little bit slow or it's going to be a little bit choppy. All right. So going in line with the trend is generally going to be a smoother move. All right. So let's see here. Over here, we have a nice bounce off the trend line right here. This one is coming in between the 9 and 10 a.m. candle. So you can see it came, bounced off the trend line. If you went long, after this one closed in here, if you went long, you can see that you'd be able to catch this move to the upside because it bounced off the trend line and closed inside. So long, right? So you could have been able to catch this one to the upside. Came, hit the trend line again. It didn't close inside. It broke out above, but as you can see, it still pulled back. Okay. So this is the correction before it gave another impulse to the upside. And look how deep this correction was. Very, very deep correction. Okay. Now, even with this correction, we can create a trend line for it. We can create. All right, so that one was done. All right. So this one, it was done. It went down 1, 2, 3, 4, 5. That's a complete wave. Okay. So this one was not something that gave us enough room to make decisions. It gave us a nice wave like this. Right? But if we were to draw this trend line earlier, it would have been drawn like this. And this one would have been closing outside. Okay. But as you make your adjustment would be made like this. So as you can see, if the price came here, it didn't quite touch the trend line in this case. The next candle would have come, hit the trend line, would have broken out to the upside. Let's put in another, the other border to the trend line. Let's put this one in. All right, so here we go. So this would have been that channel to the downside that we were looking at. And as you can see here, as price came down, it did hit the trend line in this case. So with it coming down, hitting the trend line down here, closing to the upside, we could have entered this one going long because this one closed to the ups. It closed bullish as a bullish candle. It's also a pattern where we have price flagging to the downside. So if you understand the Elliott wave theory, you can see that this is impulse, this is correction, and this is our potential next impulse, the upside coming at that point. Why? Because we already have 1, 2, 3, 4, 5 to the downside, and we could potentially see another push up. And this 5-wave move that we're looking at could be WXY, XZ. Okay, it doesn't necessarily have to be a 5-wave impulse. This is a 5-wave corrective move, okay, which is actually WXYXZ. All right, it tricks a lot of traders in time, in some cases, but if you really pay attention to the wave, you will see that it's actually not a impulse. It is a corrective type move. It's not necessarily an impulse wave. Okay. Let's see here. Joe says, what time was that impulse move to the downside? Is it this one that you're talking about, Joe? This one over here? Oh, the triangle one. Oh, the triangle one that you're talking about. Okay, this triangle one happened on the close of the 2 a.m. candle, which is at basically 3 o'clock. So at 3 o'clock, we got a move up. It hits the trend line and it bounces off it to the downside. So this is the 3 to 4 a.m. candle that made a nice move to the downside here. Okay. So we try to use trend lines to create our patterns and look for bounces off the trend line to help us to identify if the price is moving to the downside or if the price is going to be moving to the upside. Okay. It's good to try to trade with the trend, but as the price creates impulse and correction, if you notice that you're in a corrective cycle, it would be good for you to look to go against the corrective cycle in a case like this, where we got the strong move up, we got this weak corrective looking move to the downside. So looking for when price hits the bottom trend line would be a nice idea because we're going to be expecting some strong volatility to the upside. Okay. Because as you can see here, this is the momentum. Strong move up, corrective move down, strong move up. Okay. All right, let's compress this chart. Let's see what else we got here. Let's see. So we are moving from one trend into the next. And let us see. So I've connected these two swings, this swing and this swing. Okay, so this is my trend line. I'm going to clone this. All right. And I'm going to take this and I'm going to put it at the top. So I got a situation where I put my trend line to the top. I can either put it at the end of the wick or I can put it on the body like this. All right. And look what happened. Price stayed inside of this. Okay. I didn't quite get where price hit the trend line. So I didn't quite get an opportunity to go short on this. Go short here. I didn't quite get that opportunity. If I had to find an opportunity to go short, I may probably have found it, you know, inside of this piece of move here. Right? This, if you guys were present when I did the 12-12 class, where I look at pattern formations between 12 o'clock, 12 p.m. to 12 a.m. around those times. I look for pattern formations. So I would have been able to draw a nice pattern that looks something like this. So this is the low here. Right, I would have been able to draw a pattern that looks something like this, right? Between 12 p.m. and 12 a.m., right? So that's my pattern. And if I were to look at how the price is moving inside of this pattern, as you can see, it went down, it went up, it went down, it went up. I didn't quite hit the trend line up here when the price came back, okay? So I didn't hit the trend line. If I did place this trend line on the body of the candle, it looks like this, okay? But I placed it on the wick. Second. Good, so I placed it on the wick, and as you can see, it didn't quite hit the trend line when it came to around 2 a.m. Eastern Standard, right? So between 2 and 3, it didn't hit the trend line. Price continued moving down. It hit the trend line over here and closed inside. So in a case like this where it hit and closed inside, I'd be looking to, look to go long. But as I said, I use software. So if I turned on my software in this area and price did not go long, but it went short, there's a possibility I would have been able to catch this move to the downside right here. Okay. So looking for bounces off the trend lines are very powerful. Looking for the chart patterns and the bounces off the trend line in the chart patterns are also very powerful. Okay. Let us see. Here you can see we came down. We hit the bottom trend line, and we hit the bottom trend line inside of this time slot. So with us hitting the bottom trend line inside of this time slot, closing inside the trend, this would also be a nice reason to go long. So we could have jumped in here and gone long. As you can see, this is sloping to the upside. So it will be carrying some volatility to the upside. As you can see, it's not necessarily sloping very aggressive to the upside. So it will also be carrying some volatility to the downside. Okay, because this is almost flat. All right. Here you can see price went to the upside and it hit the upper trend line. And with it hitting the upper trend line, look how aggressive it came to the downside. It came down extremely aggressive to the downside. Okay. Joe says, wow, nice move. Wonderful, wonderful. Any questions, guys? Anything you're not too clear on? Or what would I say next now with the current pattern that we're looking at, like what to expect? Okay, let's see. I compressed the price. And I'm looking at this and let's see, what are we looking at here? We had this flat, we had this aggressive push down, we have this move up, kind of hit the top here. So what are we looking at? Let me see here. This kind of looks like it has the potential to give us a nice reversal to the upside, which means this last push down could have been it for EuroCAD, and we now start going bullish. Okay, so there is a possibility we go bullish. That does not have to mean that we're going bullish long term. We could be going bullish, creating a bigger corrective formation for a more downside. Okay, so for now, I would look at this and say, okay, we have one push up, one push down, one push up, one push down, one push up. I'm going to expect this to go into correction soon. So I'm going to expect this to start correcting to the downside before we make another push to the upside. So I'm going to expect some more volatility in the longer term to come to the upside. Okay. The only thing is if this just corrects all the way back to the low. If it corrects all the way back to the low, that's still not a problem. I'm still going to expect a burst of volatility to the upside. It's just not going to expect, I'm just not going to expect it to go too far. I'm going to expect it to maybe come back to the high, okay, before going down again. All right, but for now, this, I would look at this and say this is the first push up for a correction to the downside, then another push up. How deep that correction is going to be, that is left to be seen. It does not have to be a very deep correction, but it's very likely that correction can come back to these areas over here, right? It's very likely it can come as low as these areas over here and potentially even lower, back to the low. Okay, so you got to be careful with it. That is why it's not very nice to be trading in a corrective cycle. It's better to trade only for the impulsive cycle. Even corrective cycles have impulsive cycles as part of them. So you got to look for the impulsive corrective side of a corrective move so that you can take advantage of that. Okay, because that is where the momentum is going to be, in the impulsive side of the move. All right, any other questions, anyone? Ask your questions, ask away. I'm going to give you guys a few seconds. And in the meantime, here is something that, I would do, because I already have my low and I have a higher low over here. So, and then you can see price broke this high. Okay, so this would tell me that I potentially have a complete trend. So my trend line would probably look like that, and I would extend this into the future. And I would try to clone this. Right. So if you look here, you can see how well it fits here, right? It fits here almost perfect, but it's not going to be going there. This might be the middle of the trend, but this is where it is, right here. See, it goes at the high. So this potentially tells me that the move up is done and we are going into correction now, right? So if we're going into correction now, look at this. This is the potential trend that we're looking at, like this. So this correction that we're looking at, it could come pretty much something like correction, impulsive corrective move. Then you go into correction, another impulsive corrective move hits the trend line and it goes back to the upside. Okay, so that is potentially what we're going to get, because as you can see, the price is already showing us where the potential trend is. So we're going to know where we're going to expect to find support and where we're going to expect to find resistance. Okay. We can even put in the center line if you like, because as you know, trends are segmented. Okay, I'm not getting this one back. Okay, got it now. So put this one here. Good. So this is potentially the trend that we have, the beginning of it. All right, so we got to look out for that. See how the price moves inside of that. Any questions? Let me see here. The lines that I just drew, Joe is asking this question. The lines that I just drew, would I extend them out further? Yes, I would extend them out. I would just ray the lines so that they extend out into the future. You need to make sure that you draw them as accurate as possible, because with MT4, it doesn't necessarily just give you these simple tools to allow you to clone the lines. You got to draw them over and over again. So you got to make sure that you draw them properly. So draw the lines, clone them, and make sure that you create your trend properly. Remember, trends are generally segmented. They come in two parts. You got the upper part and you got the lower part. Generally, the segmentation comes in the middle. All right. In some cases, it may be different. It may have a smaller upper part or a smaller lower part, but generally you'll be able to see where the segmentation is actually happening. Okay. Generally, it's very visible. All right. So here we have our upper trend and we have our lower trend. Okay. I'm going to expect the price is going to stay inside of this trend here for a little while. Not very long, but at least it's going to be here for maybe a few days or a week or so. Okay. We'll see how it plays out. But this is the trend I'm expecting for tomorrow. So tomorrow, I'll be expecting this price to start making its way at least to this area, and we could get a bounce over here. Especially seeing that we have this moving average here. This moving average could actually offer some more support in this area of the trend line. So when price comes back to this area, we could actually see a bounce from here back to the upside, hitting the trend line. Hits the trend line, stops, corrects back to the trend line again. Okay, so you got to look out for that. If it comes down aggressively and hits the trend line, then we could see a correction, then make another aggressive move to the downside. Then we get the bounce from here to the upside. Okay, so you got to watch and see how the price moves, and then you'll be able to decide exactly what you're going to be looking out for. Okay, but for me, I'll be looking for price to make its way at least down to this area. Okay. If it doesn't complete the move down overnight, then it may just build some sort of, maybe some sort of triangle looking formation, something that looks kind of like this. Let's see here. Yeah, something that looks kind of like this, where it moves up, down, and stays inside here. And when it comes to around 2 o'clock, it's going to break down. Okay, so this type of wedge looking formation to the upside, we look at that and we call that an ending formation. Okay. If this does not break to the downside and makes one more move up, then this could just be a correction and we get one more move up. Then we would have to extend the channel one more time to the upside, and then we'll expect to move down. Okay. But as I said, if you use trend lines, you look to trade when price hits the trend line within the time slot of 2 a.m. to 4 p.m. Once price hits within 2 a.m. to 9, the 9 a.m. candle close. So within that time, if price hits a trend line, you're looking to enter. All right, you're not looking for a situation where the price hits the trend line to the upside, comes down, and still within the time slot hits the bottom trend line, and you want to look to go long. It's better that you look for the first entry. So the first entry will be best, because if it comes down very aggressive and it bounces off this area, it doesn't mean that it's going to make another impulse up. It could simply just go into correction. Okay. You can also try going both sides if you like, but you got to prepare that if it's going to be moving back to the upside, it could be moving back to the upside very slow. All right, it's very slow and choppy. So you want to make sure that you catch the best side of the market. I would say the best side of the market would be the upside. Even if we have this impulse here, this impulse is just telling me that the move down may be complete and we're making our move to the upside now. So if it comes down weak, we look to catch it to the upside. If it comes down strong, then we can wait to see if we get a correction and expect another strong move down. Okay, once it bounces off the trend line, we look for the move up. All right, let's see here. Mario says, do you have a systematic approach to these concepts? Okay, in terms of having a systematic approach to these concepts, it's very simple. It's just a matter of when I'm trading, since the price is on the high side, I'd prefer to wait for the price to come back to one of these trend lines down here. Either it comes back here or it comes back to this one. So once the price makes its way down here, I'll be looking for my move to the upside. Okay? Because I'm going to be expecting that we're going to find some sort of support in this area and price is going to bounce off it, taking us back to the upside. All right? And staying with the trend. The trend is up. This is a big trend to the upside. So this gives me enough room to make enough pips, right? If you look at the size of this trend line, of these, of this channel, this is 57 pips. This is 115 pips. So this is a very big channel, okay? So this channel would give me enough for me to be happy, okay? It has enough pips inside of it for me to be able to wait for price to come down, bounce off this trend line, and I go long. Bounce off the top, I go short. Okay, once it's bouncing off it inside of the time slot that I'm looking at. Because within that time slot, we can expect a lot of volatility to come into the market. We just have to look at situations where price and trend line match up. Any other questions, guys? Anyone else? I see Mario says, can I get alerted for this? Well, we don't have a tool for MT4 that will alert when price hits a trend line within a set time, unless we create one, okay? But if you're looking at TradingView, you can actually set an alert on your trend line. So if price hits the trend line, the alert will go off. So you can do that for TradingView. Any other questions, guys? Mario says that makes more sense to use TradingView with the alerts instead of looking at it all day. You don't have to look at the price all day. You just need to come look at it within this time slot. So within 2 to 9, you want to look at the chart to see what's going on. So if based on where you're from, some of us don't want to wake up too early in the morning to get into a trade. We would prefer if, we can get into the market around 8 o'clock. So if you're a London session trader, then you'll be looking to get up before 2 o'clock. If you're a US session trader, then you'll be looking to get up for 8 o'clock. Okay, so if you want to get up for 8 o'clock, you can check it at that time to see if you have a setup that is giving you a bounce off the trend line at 8 o'clock. So if you're getting a bounce off the trend line at 8 o'clock, like in this case, as you can see here, in this case, we got a bounce off the trend line at 8 o'clock. Right, so sorry, this is 8 to 9. So between 8 and 9, we had a bounce off the trend line. This one actually hit the trend line, closed above, okay? So in a case where we have this price moving so flat, when price hits the trend line, it closed above, we can still go short, right? Because it hit the trend line and the price is flat. So if the price is flat, it means that the price is supposed to be moving down. So it doesn't necessarily have a situation where we're having a lot of momentum to the upside either. As you can see, this one is moving up and it's moving up very slow and choppy. So with it hitting this area, it's only basically giving us a situation where we can actually look to go short. And remember, we have this, right? So it's closing outside, but it's not really giving us a very big close above, especially since we're moving flat. All right, so it's just a matter of understanding the pattern formations. Once you understand the pattern formations, you know that we are basically going to be getting, a nice move back to the downside instead of having a strong move to the upside, because we are moving flat. So moving flat means corrective or downside, especially when you have the previous impulse coming to the downside. It means that you're going to have another impulse moving down. If you're very versed with the Elliott wave theory, you'll be able to do your wave counts and understand if you're on your 5th wave, if you're on your 3rd wave, you'll be able to know exactly what wave you're on. So you will know, okay, we're on wave 5. Once the price comes down, it breaks the low. I'm going to have to look for my exit because wave 5 could be truncated. Wave 5 could be a short wave, especially once you have wave 3 being extended already. All right. I'll give you guys one more chance. If you have any questions, please go ahead, drop your questions in the chat box. If no questions, we can wrap this session up, and I'll see you guys next time. So I'll give you guys a few seconds. All right. You're most welcome, Joe. Most welcome, Mario. You're most welcome, everyone. Thank you so much for coming. You guys have yourselves a wonderful evening. I'll see you guys next time. Bye-bye. Blessings to you as well. Bye-bye, everyone. Bye, Shar. You're most welcome. Bye-bye. Bye, Grace. Bye, Regina. Bye, Tella. Bye-bye.